Hey guys, Boris Schlossberg. Welcome to the Crosses discussion for June 26th through the 30th of 2016. Well, uh, last week we said pound yen was going to be the Brexit trade, was going to be the poster child for the Brexit trade. It certainly was. If you traded it, I don't even know how you could have traded it unless you traded it for essentially cash on cash basis because I don't think anybody has ever seen. Was it a 3,000, maybe 4,000 point move? I don't even know. Maybe it was a 4,000 point move. It was just clearly insane. It was a huge amount of fun if you traded it very small because just you're talking about 100 point moves every minute uh, in every possible fashion. Spreads were like 25 to 30 wide. It really was the absolute insane play of the whole event. The second most insane play of the event was, of course, Euro Yen, which also set up, I think, multi-year lows as the risk-off trades really came into play. Especially, I mean, of course, with dollar yen going below the parity, it just pulled all the yen crosses very, very sharply to the downside. So both of those trades still remain very much the core focus of the market on a risk-off, risk-on basis. And then we have a third idea this week that I'm going to discuss with you that I think is in some ways far more interesting than what I would call the relative strength trade. And we're going to take a look at that in just 1 second. But let's just take a look at the charts here. And so sort of a side note, I mentioned in the COM dollar segment that Aussie CAD is an interesting cross look, and I still think this is it's not an exciting look. It's not a multi-hundred point move, but I like this fundamentally and technically. This is really telling me, both from a fundamental and technical point of view, that the trade here is to the upside. Technically, we have a very, very nice rounded bottom. We have a huge candle to the upside on the dailies, right? This is just a daily buy up, which shows a lot of relative strength. And generally, these kind of daily candles suggest further upside to go. And then if we, even if we're just simply to look at this on a weekly basis. It looks very bullish on the weekly basis too. Nice big rounded up. There is 98, of course, the near-term resistance here. 99 is the other resistance. This is not an exciting trade, but it is a very interesting, I think, tactical trade for anybody who's looking for some ideas off the beaten path. Now, as far as the standard cross trades, the euro yen still very much. Look at this move, 120 to 110. I was actually surprised at how decently we were able to handicap that last week. That I think I sort of said 110, 115 on the support levels, which was close enough. I mean, it did bounce off the 110s. I really thought that was insane, but even in your worst case scenario, you couldn't have imagined what happened last week. But now that's a very, very clear range. I mean, I think sort of the 110 is as clear a range in the euro yen as the 100 is in the dollar yen, and that's going to be a key point of contention. So the trade comes down to the 110s. It's probably going to attract some buyers at this point. We made fresh multi-year lows, so clearly a downtrend, clearly lots of negative risk off moves. But at the same time, the kind of volatility that you have in this candle also invites huge amount of short covering. So I think you need to be very if you're going to be an aggressive seller and try to sell the lows. Be prepared to have your face handed off to you if there's a short covering rally, because a short covering rally will not be 100 points or 200 points. It will be 300-400 points in your face, and you better be able to absorb that short covering if you're or just get out of the way on a break of the 110s. Still think probably the better trade here is going to be just sort of wait towards the 14-15, because I think the 14-15 is naturally going to create a move to the downside. You're not going to have a V-shaped recovery in risk after everything that's gone down last week. With the pound yen, it's even a more insane situation where you had, this was, it was almost 3,000. I guess it was 2,500, right? Pretty. Let's just take a look at the display data. Let's just look at this candle for the day. It's a daily candle. It's a daily candle. It's really it's mind-boggling for anybody who trades FX to understand what a daily candle does. 160 to 133, so 2,700 points. Right, I don't think but there were years that didn't do 2,700 points in that particular cross. But anyways, certainly from a technical point of view, what do you see here? You do not see a pretty picture. This is a very clear. Basically, pound yen is a sell the rallies trade. The only question in your mind should be, at what level do I want to start selling? So 145 probably you can start building a short position. There is this sort of gap that we filled to the to the downside. May want to fill it back up to the outside. I would say I guess building shorts from 145 to 150 should be a very decent position on any kind of a bounce, on any sort of a near-term euphoric bounce. You may not be able to get it. If we open up negative on Monday and we still have just sort of negative flows, this thing could easily go down to 130 before it kind of finds a little bit of a support and a bounce back. You have to be very flexible and very content. I still think that the trade here is very much sell the rallies. You can try to chase and be an aggressive seller. You can sort of say, okay, you know what? This is clearly a downtrend. It doesn't look like Brexit is going to be unwound the other way, and if that becomes the reality of the world, it's going to be much more heavier pressure to the downside for this particular cross. So you could just park get short market here, and then if it goes up against you, keep it's very small increments, obviously very small sizes. Get further short up to 150, at which point I would cover, because then you would be clearly wrong to do 1,000 points in your face on this thing without coming back down. Probably something different that we're not anticipating is happening. But that's one way. The other way is to just simply pick your spots and start getting short around 145 to 150. But you may not be able to get that. Ultimately, I do think it probably goes to 130 as the initial target to the downside in the pound yen, and that's a very strong move, and one that's very tradable, but only at a very small size, right? So you just have to understand that any currency pair that moves 2,700 points in a day, you can't trade like any other currency pair that we trade. But still, this is still to me the Brexit trade. I mean, if you want to express your view on, at this point it's post Brexit. I guess this is the UK trade. This is how you feel about UK post Brexit, and fundamentally, clearly, it's a negative event, which means that you could have further downside action in the trade. I'm actually just curious. Let's just look at the monthlies. Let me see if I can go all the way out here to 30 years. I'm going to go on a monthly 30-year chart just to see. Yeah, it's 120. So we talked about 130 as the natural support. So 120 would be the monthly support. It's not out of realm of possibility that we could see that ultimately in this trade. That's 2,000 points from here, and that could very well be the story. So keep that in mind as the key cross to focus on. Now, the last thing I kind of want to talk about is something different this week, which is what I think is kind of an interesting relative strength trade that's shaping up in the market, and that goes back to the idea. Remember, we talked about the idea that I thought the euro was going to be, no matter what happens, the euro just kind of is a wounded animal at this point because of all of the turmoil that goes on politically. That Brexit brought on, and you can see the rollover here. This is Euro Aussie, and this to me is an interesting relative strength trade. In other words, whatever happens in the market, I think the Aussie is going to outperform the euro. Certainly, you see that very clearly in the Friday candle, which was just a huge flame out shooting star to the downside, and it suggests that at the very minimum we possibly have a move towards the 145s. So the trade here would be, you could go short market with a stop well above this 150, probably 151 stops is where you need to be just to sort of survive any short covering moves. The only way this trade doesn't work is if you have just a short covering squeeze in the euro that takes us temporarily up above it. But ultimately, even I would even say sort of on a longer term basis, if you're a longer term structurally oriented trader, I like this trade on any kind of a move to the upside unless it breaks the 155s. At that point, the whole fundamental technical thesis really gets blown out the window. But up until that point, I think the longer-term technical and fundamental view here that Australia is a much more attractive place for capital than Europe is at this point, and is going to attract more flows as money tries to get out of the way of what looks to be a slow motion car wreck. Definitely an interesting trade. With 45, just the initial support. This is a big support. It's a quadruple bottom support. But remember, if we go into that whole mode of tension that I talked about, in other words, if love does not triumph, and if they can't compromise, and they basically all play hardball with each other, and the Europeans just try to push the Brits even further out of the Union faster, it's only going to exacerbate tensions everywhere else and open up the possibility of Italy being and as a matter of fact, the key thing that I would be focusing on as far as Europe goes is Italy, Italian assets, Italian banks for the next 2 to 3 weeks. If those come under a huge amount of pressure, there is just no way I can possibly see the euro not crumbling under that possibility, because it really would mean that the European Union could unwind because of Italy spinning out of the union. Either that, or they're going to just simply have to open up the conference. This is going to be a very interesting dynamic where either way it's going to be bad for the euro, where the ECB is just going to buy up all of the Italian debt and amortize it, which is the only way I can see the whole situation resolving itself into a pro euro stance eventually, is if Mario Draghi just simply says we're just going to buy up all of the Italian debt, because the pressure on the Italian debt is going to be enormous post this event. So I like this trade to the short side. This is the interesting cross that everybody should be looking at. Thematically, you have to trade it wide. You have to trade it, certainly with lots and lots of room for error here. But ultimately, I think that the direction is pretty clear to the downside. It's really proving, both technically and fundamentally, that the carry trade is the better trade, or the relative strength trade is the better trade to the Aussie. I wish you guys the best of luck, the best of trading next week. Boris Schlossberg, over and out.